Hi and welcome back to Cheeky Crypto. My name is Nick and today we are discussing Bitcoin. We've seen some interesting movements with price most recently, and so we're going to be jumping down into the technical analysis on the 1 hour, 1 day and 1 week timeframes, giving my thoughts and opinions on what I think is likely to happen next based on recent movements. As I get into today's video, if you do find it useful and informative, smash the like button. I appreciate that. If you are new to the channel, subscribe. You can always unsubscribe later. Stay up to date with all the content that we do here at Cheeky Crypto. And if you want to continue the conversation, join us down in Discord, completely free, linked in the description below. It's a fantastic community talking crypto 24/7, and I don't think you'll be disappointed by what you find down there, so check it out. Let's jump right down into today's video, kicking things off with the 1 hour time frame. So let's take a look. Right, what have we got going on here? Well, we had our kind of fifth wave movements here, and like I said yesterday, it looked like we still had a little bit more to the upside, rinse and repeat almost, right? Now we did break our trend line here, as you can kind of see. We did turn it into brief resistance and we broke back through it again, and now we're below it. So I think this trend line is just essentially garbage at this point, but we will go ahead and just depict here that we have this expansion that is occurring. Okay, so you can see here we have higher lows, but we are still breaking some of those high lows at the same time. Basically we're still higher, but we are deeper within this area as well. This basically looks like what commonly is known as a megaphone pattern. I look at this more as maybe an expansion in that fifth wave move, right? And so what we want to do is we want to get our head around where we currently sit within our structure. Okay, do we have more to the upside? Is this a C wave move rather than a fifth wave move, and those kind of things, right? And so for the most part, we can see here that we had this idea of an irregular flat. I still think that is where we sit. We're just in the C wave pattern here for this one. Okay, so I don't think that's anything unusual here going on. I expect that we're just going to have a bit of a ranging market over the weekend, as typically that's what you would normally expect to see. On this 1 hour time frame, we're heading down to the oversold area as we are finding support here on the 50 hourly EMA. So I expect to bounce upwards. Again, this is also coinciding with a 3-wave drop here that appears to be finishing off and basically ready to have a reversal. So we expect a bounce. I'm not expecting much of a bounce because volumes are historically low on weekends. Throw the volumes in here. If we just zoom out of this thing, you can really get an idea that on this hourly chart, they are not overly that significant. So just keep an eye on that. But for the most part, that's kind of what I think is likely to happen here. Just going to range sideways. The stochastic RSI is going to give us some false flags. It's going to bounce from oversold to overbought to oversold to overbought quite a bit over the weekend. We might have a bit more of a challenge tomorrow when we see people trying to get their weekly close, which we'll discuss tomorrow morning in the Bitcoin video then. But ultimately for now, I expect a small bounce upwards to happen next here on the hourly. Really, hourly movements over the weekend are not that important. We want to be reflecting on the bigger structures. The bigger structures are still looking bearish. They haven't broken out. We are still below, as you can see here, the 50 and 200 EMA. They are about to cross to the downside. You could death cross is looming here on the daily time frame. Take a look at this also on the moving averages. The one that I'm looking for specifically is going to be the yellow line, which is your 50 moving average crossing down lower than your 200 exponential moving average. So as you can see here, they're on a collision course. This is a death cross in the making, and we are going to see price react negatively to this, even though it's only showing us what's already happened. I do suspect people are going to get freaked out by it. So keep an eye on that. But ultimately, even the 50 EMA is looking to cross down lower than the 200 EMA. So short-term price is going down lower than the longer-term price. So we are still bearish here. We haven't got a bullish structure to be seen. Although we haven't broken our current bullish pattern on smart money concepts, or structure on smart money concepts, we are bearish according to Elliott wave theory. So we're just waiting essentially to get a close position below $24,807, which will basically get a change of characterization from bullish to bearish on the daily time frame. Now, why else am I bearish? Well, we have to be considering the daily stochastic RSI is up in the overbought area. So not looking strong from a momentum point of view. Essentially, we've utilized all that momentum. We're coming up against resistances at the 50 and 200 EMA. We have the death cross looming. Essentially, guys, we haven't really got much of an option but to fill out this pattern, in my opinion. I don't think there's enough bullish momentum to take us out of this structure, which would be putting us above 28,588. If we do not push higher than 28,588, we essentially have no choice but to finish our pattern down here at our low target of 22,693 to 23,874. So, we can be bullish, we can be bearish, but essentially here we're in a bearish pattern unless proven otherwise. The only way to prove that we are not in this pattern is to break higher than 28,588. So if you want to be bullish on the market, that's the number that you're going to be looking to try to get the price of Bitcoin towards, 28,588. Failing to do so, the bears will drag the price down more towards the $22,000 to $23,000 targets, as we show right here. This is a fifth wave movement of a larger pattern, and if we do complete this, then we expect a significant bounce upwards, but that bounce will be short-lived because we must finish that off with another five-wave drop, meaning that we are likely to come down towards the $20,000 CME gap that we've been talking about previously. Okay, this isn't anything unusual, this isn't anything new, this is exactly as we have been talking about for several months at this point. It just takes a long time to play out. So we're kind of on path, on the direction for what we're looking for. What I personally want to see is I want to see Bitcoin testing 20,000. I want to see the CME gap get filled, and I want to see whether or not the Bitcoin kind of bulls can actually rally around Bitcoin at 20K and take it out of that danger zone. If we lose 20K, I suspect we're going to be slipping down to the fair value gaps at 17K, and really it's just a small drop from there into new bear market low points. So we want to be really careful. I think a lot hinges on Bitcoin at $20,000, so keep a close eye on that. Then, of course, we have bigger macros such as the weekly time frame. And this will be hinted in the thumbnail a little bit here as we kind of talk about $10,000 Bitcoin versus $100,000 Bitcoin. Okay, now I think both of these are very interesting kind of points to kind of be keeping an eye on. Now, in terms of the big bearish $10,000 BTC, how do we get there? Well, we get there through a mixture of very bearish things that are happening in the real world. It's hard to dispute that there are not some of these crazy things happening in the space. Ultimately, we can, of course, acknowledge that there is a three-wave technical pattern here that can see us moving down more towards $7,000 BTC. Now, that is obviously on the bearish side of things. The minimum expectation on the C wave would actually be a double bottom with the existing low. So we don't have to see 7,000, but typically a C wave does land between 1 and 1.236, which in this particular case would put you at a $5,000 to $7,000 BTC. Crazy, I know, right? And I'm not saying that that's something that has to happen. It's just something that we can note from the structures and the patterns that are here within the candlesticks. However, if I take this out and I put this onto the Bitcoin USD pair using Bitstamp, I have connected all of the low points and all of the high points, okay, in this chart. So let me just bring this in, right? So across the years, all the way from 2011, I've connected all of the lows in Bitcoin's history and created this curved line. We then did the same for the high and the peak as well, right? So when we take a look at this and we say, okay, well, if we are to see this kind of corrective pattern to the downside, maybe this is going to be our bear market low point, not all the way down to that $7,000 level, but actually right here at around $12,000. It might even be that we just peak down just a fraction more, hit 10K because it's a nice round number. There's a key area of support to be found in this range as well, and then we bounce from here. Okay, and the upper area puts us at $110,000. Okay, so if we were to just range between the low point and the high point, we actually hit both of these numbers. We hit the $10,000 to $12,000 range, and we hit the $100,000 to $110,000 range. So I don't think it's necessarily a competition to say, look, the bulls are targeting out 100K. It's a nice round number, all the way through to the bears saying, look, we're going for $10,000 because it's a nice round number. I think there's some truth to both of these scenarios, and we, as kind of objective analysts, have to be open-minded to think, okay, well, possibly do both. Why just think about one when you can actually see technically reasons that both of these could potentially get hit? So it's an interesting kind of point of view. I wanted to talk about it a little bit today to say that there are still these really bearish scenarios that do have the potential to play out. There's many different reasons and rationale behind it, but essentially, hopefully they don't come to fruition. We don't really want to see a $5,000 to $7,000 BTC. Although that is a great opportunity, I think it would create mass damage damage to the altcoin market. Many projects that are legitimate and should survive potentially couldn't survive under those kind of strict scenarios, but specifically with liquidity drying up to those kind of degrees. So we don't really want to see $5,000 to $7,000 Bitcoin, but a move to the downside, testing 20K, seeing how price reacts. If we need a new lower low, $12,000 to $10,000 is where I would hope things would rest and settle, and we'd get a nice bounce to the upside from there. Okay, but let me know what your thoughts are in the comments below. I'm going to wrap this video up right there. If you found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? You will not be missing another video update if you tap the bell and select all the notifications. Join us down in Discord, continue the conversation there, and guys, I will catch you all in the next one.